Okay, so in this video, it's going to be a bit fun. We're going to be looking at some of the companies that somebody like a Tony Stark would invest in. And if you don't know who Tony Stark is, it's a made-up character from the Marvel Universe. He is Iron Man, if you haven't heard of him. And of course, Iron Man and Tony Stark, they ran a company called Stark Industries, which was a military industrialized complex style company. So that's kind of the companies that we are looking at today, but there's some that you may not have ever heard of before. So let's get down and let's check these out. So the first one is Raytheon Technologies. The Raytheon Technologies is quite interesting. It's an aerospace and defense company, and it provides systems and services for commercial, military, and government customers worldwide. It does pay a dividend, so of course if you are a dividend investor like myself, you probably will really like this company. It pays 2.5% at the time of making this video, and its average share volume per day is 7.2 million shares traded, which is huge. You should be able to get in and out of this stock with ease. And in my opinion, it's actually quite an interesting company. These are all companies that I just absolutely love reading about. If you go to all of these companies I'm going to talk about today, if you go to their website, it's actually quite crazy some of the technologies that they make for the militaries and, of course, everything else around the world. It will actually blow your mind, some of the new technologies that are coming out. So over the past 5 years, they have had almost every single one of them has had a pretty good time. Of course, it did have a bottom roughly around the end of 2018. However, as we can see here, it had that upside down head and shoulders, which of course helped it run quite a bit. And ever since that huge coronavirus downturn, we have seen a slow recovery, and of course, nothing has really changed for this company since that point. So I would really believe that it would get back up to $100 per share probably over the next year or two. And if you look at the past earnings, it's actually quite interesting. Of course, the first quarter of last year did not do so well, but the three responding quarters have done pretty good. One being a blowout, two being pretty well in line. The next quarter, which is the first quarter of 2021, will be announced May 5th. From there, we look at the financials. Revenue was really good in 2017. It dropped in 2018. Well, we all know why, and that was because Trump was buying less and less military stuff because, of course, he wanted to pull out of the Middle East. And then, of course, since then, it has slowly climbed back. Sigma Labs is another one that is quite interesting. Obviously, it's going for a massive run at the time of making this video, but basically, what Sigma Labs does is it develops and commercializes manufacturing and materials technologies. Basically, the company offers, as of right now, their biggest, moneymaker is their PrintRite 3D. Basically, it's a metal printer, or a metal 3D printer, and it's something that I think it was Northrop Grumman is investing in and purchasing to use, which is actually quite interesting, which is why we're seeing Sigma Labs' share price go hugely up. They recently had a 100% day, so that's actually quite huge. And of course, they do not pay a dividend, so if you're a dividend investor like myself, you may not be looking at this one per se, but for growth and of course for the future, we all know that NASA and many other companies are looking at this type of technology into the future, because to ship up parts to the International Space Station, to ship up parts to the moon, to ship up parts to Mars is quite costly because you have to build it here on Earth and then you have to ship it up there. And of course, there is a lot of space, a lot of airspace that is being used that doesn't have to be. You could literally ship up either metal or solid metal, liquid or solid metal, up into space, taking up a cube, for example, and then you could print what you need up in space. And when that happens, you now don't have to say, well, the satellite was this big, but now it's only this big because it was liquid or solid steel, and then we got to melt it down and build it into something that's this big, if you get what I'm trying to say. Their average share volume right now is 5.4 million shares traded per day, so you can get in and out of this quite easily. Now, of course, about 5 years ago, it was trading at $10 per share, and it was not doing so well up until recently. Recently being the year 2020, and in the year 2020, it went huge. It went massive. It went from $2 or so a share up to well over $5 and even $6 a share in a very short amount of time. Anytime that type of stuff happens, it will always pull back and stabilize. That is what we see here. We have now seen a recent jump, being 114 or 140 or so percent day just the other day, and today, as of right now, it's up at the time of making this video, 7.3%. Do I think this has got time to run? Yes, considering that NASA and many other companies are looking to, SpaceX being one, looking to go to the moon, looking to go to Mars and beyond. We're still really new into this type of technology, but Sigma Labs seems to be the type of company that is really looking into the future. This is more of a 20 to 30 year play and not a 1 to 2 year play. But anytime you're looking at a company like Sigma Labs, in my own opinion, this is how I would play it. I would buy however much you want. Let's say you wanted to buy 1,000 shares. That would equal $5,800. And let's say you bought 1,000 shares. Well, once it doubles, sell half. That way you make your money back. And now that's essentially a free stock. And then at that point, let it run 20 or 30 years. And I can almost guarantee you, I can't guarantee you for sure because we never can tell the future, but if we're looking at a company that is going to be potentially building things in space, and it's one of maybe 4 companies that are currently doing that kind of stuff, they have a pretty good chance of being something in the future. For their financials, they, of course, have been losing every single year. However, now they have signed that contract with Northrop, and of course, when more and more companies are going to be needing their services in the future, especially when you're looking at 3D printing technology, metal 3D printing technology, and so much more when it comes to aerospace, defense, oil and gas, biomedical, and power generational type industries, now this is starting to become interesting. The third company is Lockheed Martin, LMT on the stock market, and Lockheed Martin is a dividend-paying company. It does pay around 3% dividends, and its average share volume is 1.9 million shares traded per day. Its PE ratio is actually really low at 14, and this is a type of company that I would be personally looking at investing in. If you look at its 5-year chart, it's had a very solid run from just over $200 to $250 a share all the way up to a massive $430 or so per share company. During that coronavirus downturn, it had some massive downturn in its stock price, and it still continues to go down. Actually, if you look at the trend of it going downwards, it's actually just broken past that downwards trend. Does it mean that it's finally starting to bounce up? Who knows? This is still an interesting stock in my opinion. I still feel like it's a $400 stock, but when we're talking about companies like Lockheed, Northrop, and all of those, this really does depend on how much military spending every country, at least in the G7, especially when you're talking about a company like this, how much military spending is being spent in the G7, or also how much space spending there's going to be into the future. Space is a massive frontier, and I think that there's going to be more and more countries trying to get up into space, and more and more companies trying to get up there too. So there's going to have to be a lot of defense in space, whether it be from missile type of defenses into just radiation defenses when it comes to satellites being defended by the sun's radiation, of course, when there's solar flares and things like that. So I think that Lockheed Martin is set up for the future. They are no longer just an aerospace defense company. They are also going into space. Of course, aerospace, I understand, but I'm talking about not just defensive characteristics. I'm talking about trying to get things to the moon and Mars and beyond. They have also had a pretty good earnings quarters over the last 4 quarters, and of course we can see that they are continuing to make more and more money every single year. When we look at the first quarter of 2020, they did do very well, especially how it's an April quarter. So what that tells me is, especially with the economy getting better, more and more countries looking to spend on military, I'm thinking that it's going to be another blowout quarter, very similar to quarter 1. Of course, this is my own personal opinions. Never trust a random person on the internet, but this is just how I feel about a company like this. And of course, last, I've mentioned it quite a few times in this video, but Northrop Grumman. Northrop Grumman is another interesting company. They do trade a little over 1 million shares per day, and of course they do have close to a 2% dividend. If you're a dividend investor, this is another interesting company. Northrop Grumman does have a lot of space assets, and of course this is all about future of technology, similar to how Tony Stark would always look at his businesses. It wasn't all about selling bombs. Their PE ratio is a bit higher at 16. And their 5-year chart actually kind of sort of looks similar. Of course, there was a spike over in 2018, and Lockheed never had that. But Northrop, again, has that downturn from COVID and a steady decline as well since then. It has stabilized roughly around that 280-ish mark. So what that tells me is that there's a potential, especially with this current downward trend getting broken, I feel like this could have at least a little bit of legs in the current time. And of course, it did have a miss in the first quarter of 2020, and many companies did, so that is actually quite interesting for me, because this would mean that this may be a bit riskier this quarter. However, I think that it could be right on, if not just a bit over. They did have 3 blowout quarters, so in my opinion, they're doing pretty good. They are still increasing their revenue and earnings every single year, so that's also good news as well. So if you are looking to invest not just into dividend stocks, but as a Tony Stark style person, these 4 companies may be interesting to you. Definitely go check out their websites, see some of the future technologies that they are working on, because to me that's just kind of interesting. I like space stuff and science stuff myself. I also love basketball, if you don't already know. So just that these are all the things that I love, and I thought I would make a video about it. Anyways, I hope that you have enjoyed. If you have, hit that like button and subscribe, and I'll see you guys again next time.